Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So currently in today's fundamental report we have tried to estimate the sentiment background for the gold currently. So since yesterday in the Forex report we discussed everything about the interest rates and coming Fed meeting and everything that stands in relation with these two events, how it could make impact in the market. So mostly the same is truth for gold, because it stands in highly dependent on Fed coming meeting and what they will say about the interest rates as well. But at the same time, currently on the market we have some additional moments. So first of all is the investors' behavior. So if we'll take a look at the commitment of traders report, you will see that actually it's big outflow from the gold, decreasing of the net long position on the background of the rising open interest. This clearly indicates the bearish sentiment on the market currently. Second, if we'll take a look at the ETFs, you will see the also outflow from the precious metals. So it tells that, well, overall sentiment stands far from the ideal sentiment for the market. Second moment is that, well, actually gold strongly depends on the Fed statement, and if Jerome Powell again ignores recent rally on interest rates, tells nothing about that, this will be negative for gold and could push gold price lower. In this case the bounce probably, well, I'm not sure, but it really could turn to some sideways action or something of that sort, without any healthy pullback that we actually would like to see here. So we hope that Jerome Powell will make some, well, hint, maybe some verbal concern about the rising interest rates. If he again tells that everything's just perfect, the recent rally on interest rates is just a reflection of the investors' view on the market, but has no relation to the real interest rates, well, in this case this will be a negative sign for the gold. Overall trading process on the gold market currently stands tricky, mostly because we have multiple targets just below the market. So at the first glance we have clear bullish Jordan stretch pattern as market stands at conference support on the monthly chart and on the weekly chart, and also oversold on the weekly. This usually suggests the upward bounce, but at the same time we have a few targets just below the market. And in most cases, and these targets actually are important. So first of all, this is major OP. It's based on this large A, B, C, D pattern that we discussed previously. It stands 1648. But at the same time, we have initial typical A, B, C, D pattern. We have initial XOP at 1670. It also has not been reached. And these two things makes me think that, well, it seems that we should get some better entry chances on the gold. More clear setups, some maybe patterns or something of that sort. At the same time, trading strategy might be different depending on your trading style and the time frame. If you're trading on the weekly chart and you're just taking the position around the confidence, you need just to hide the stop below the OP on the weekly, below 1648 or below 6040, just to the even calculation. So it lets you to engulf and protect your position from any spikes in the volatility on the Fed meeting when the market will try to hit multiple targets, 1670, 1648, 1643, this butterfly, and your position will still be valid. That's what it's better to do. At the same time, you could apply the gradual entry, so on any dip that market will form, you could think about taking some part of the position and preparing for starting of the response, preparing for a bounce and build the energy for your position. But the trading style for short-term traders will be absolutely different. They have to stick with some clear pattern that gives the clear levels where you have to place your stop, where you could take the position. Currently, guys, the problem stands solved that we do not have any clear pattern for trading. And that makes overall situation a bit tricky, especially with the 2 days before the Fed meeting. On the 4-hour time frame chart, actually, we could get the two different price behavior. So if you remember, on Friday we talked about the 17 even, and we could see the market could start to bounce again right from this area. And that indeed has happened. So if you would somehow have bottom around this area, well, that's great. You could move stops to the break even and see what will happen next. If you do not bought the position, do not have the position right at this area, it's well, not many things that you could do currently, because if you buy right here, you will have to place stop at least below the C point, and makes the coming trade almost with the risk-reward ratio 1-to-1, which is not very important, very attractive, because OP, as you can see, stands around the same daily resistance, 1752, 1760 area. It's fib level and daily overbought. So OP stands right here. It's approximately 1760. So it's not really a good way to take the position. Additionally, we could get the butterfly. When with downward action, it could let market to complete all the targets that we have around 1650, because 1618 extension stands 1637. So if market even will not reach it, it with the spike down through these lows, grabbing the stops below 1676, market could just move slightly lower, and on the volatility during the Fed statement, for example, market could complete all targets that we have and put the foundation for the bounce. So, other words speaking, the real upside bounce, the major bounce, probably still stands ahead, if it will happen at all, of course. If you trade on the intraday charts, on the daily and lower time frames, well, my view is that it would be better to wait and see what will happen. Because currently, well, it might be the ABCD, but I already explained why all this taking the position right here, it's not really very attractive decision. Alternatively, scalp traders could keep an eye on the same ABCD pattern, but with a hope that this will fail. For instance, if market will take it out of the C point, it means that ABCD pattern is cancelled, and it's really could put foundation for a downward acceleration. That will be the point to keep an eye out for the bears. If you would like to take the short position, taking out of the C point, breaking for the 618 support, it could be an important sign that market is ready to break through the A, and it's ready to complete the targets that stands below the market. So that's another scenario that you could keep an eye on. That's what we have currently on the gold. So currently we have more questions rather than answers, and probably the Fed statement should clarify overall situation.